It means a lot.
Yeah, no problem, man. If you want to give a short introduction, as we're waiting for Sriram, feel free to do so, man. As he comes in with his team.
Sure, yeah. So my name is Altair, and I'm one of the core devs at Unsheath. Unsheath is what we like to call one of the first LSD5 protocols. We're essentially trying to rebuild DeFi primitives from scratch using LSDs as a first-class citizen, as it were. Post Shanghai, we believe that liquid staking is going to become extremely competitive, and we're sort of here to facilitate lowering the barrier to entry for new LSDs, making it easier for LSDs to compete for market share, with our end goal ultimately being to deliver the best yield to our users of staked ETH.
Yeah, that's exciting. The whole LSD space is so exciting. There's so many different projects. To your point, like the competition is only getting started, and now that the upgrade has worked, and even the price of ETH hasn't seemed to be impacted negatively by it, I think the interest is going to be insane. Like I think the current staking for ETH is around 15%, 15 to 20%, and you compare that to any other proof of stake chain, it's got to go higher because on average it's around 40 to 60%. So as direct staking and LSD become more popular, more common, all the solution infrastructure around it is going to become needed. Being able to understand the difference between those LSD solution, people want to speculate on them as well. Incentivized liquidity. There's so many things to build around the NFT LSD ecosystem.
Yeah, man. And what did I say a couple of days ago now? I was literally like, I think it's going to be a net positive for ETH because of the like 2 days before Shanghai, I was telling people, I was like, dude, it's going to be a net positive for ETH because the ability to have it liquid will make a lot more people like invest. Like it's the same principle as like a lot of people wouldn't want to invest, for an unknown amount of time, but they'll market buy if they know that they can sell at any point. So yeah, man, pretty exciting stuff.
All right, guys. Sriram just came in. Mr. Producer, can you send Sriram a co-host invite, please? What's going on, Sriram? Good to have you in here, brother. How you doing?
Oh, thank you so much. I'm doing well. Thank you for having me on this space uh, with the Because Bitcoin community.
Thank you, man. It's an honor to have you. You should be receiving a co-host invite, Mr. Producer, if you can send that over.
Yep, got it.
All right, perfect, man. All right, I guess we can get started. Ladies and gentlemen, it is my honor and privilege to present to you Sriram from Eigenlayer. Thank you so much, everybody in the audience, and for the speakers for joining us today for this very special episode. If you guys aren't able to stick around through the entire episode, you can catch the replay here on Twitter and soon after up on our YouTube. And today we're going to get to know what Eigenlayer is all about. And we're here with our panel to discuss all things liquid staking derivatives. And one of the things that I find interesting about Eigenlayer is that they're going to take full advantage of the Ethereum ecosystem. Now, over the years, Ethereum has become, to what I believe, a worldwide commodity. It can be considered a quality asset that covers all three asset classes. First, as a capital asset, it earns fees for validating transactions and securing the network, making it an actual productive asset. And secondly, as a consumable and transformable asset where it acts sort of as a digital oil that powers every transaction and smart contract execution on the network, which means that Ethereum is used for a wide range of activities, sending assets, borrowing and lending, which is now known as DeFi, and also executing purchases, among others, making it one of the actual assets in the digital asset space that is used most among the 20,000, 30,000 plus tokens that are here in the market. And with recent upgrades, Ethereum has become an actual store of value, right? And as you guys know, with the recent EIP159 upgrade, the burning fees and the merge has totally changed the game and how it's issued during the transition to proof of stake. And that's where Eigenlayer comes in, right? And so there are really three stages of the blockchain revolution. First, you have Bitcoin, right? Peer-to-peer transactions, no middlemen, completely trustless, centralist resistance, all that stuff. Second, you have Ethereum, where you're able to build applications with Ethereum as the base token of value to create things, such as the ERC20 asset, right? And now you have liquid staking derivatives and also modular solutions. And this is all where Eigenlayer comes in. So it's my honor to present Sriram from Eigenlayer. Sir, how are you doing today, man? Thank you so much for coming on.
Thank you so much. Actually, I'm doing very well today. It is from the part of India where I am from. Today is New Year there. So Happy New Year to anybody else here who might be celebrating that. It's a pleasure to be here talking to you, Bobby, and the rest of the Because Bitcoin community.
No problem, man. No problem.
Thank you so much, man.
All right. So, I can get into detail about all things Eigenlayer, sir, but I want you to please tell us what was the process behind creating Eigenlayer and what's sort of the product market fit that you're looking at to distribute among the digital asset space. What was that spark that created, the passion that you guys have behind Eigenlayer?
Yeah. Uh, to give you a little bit of background about myself, I got into blockchain space like 5.5 years back. But my interest in peer-to-peer systems dates far back. My PhD was in peer-to-peer wireless systems, so-called mesh and ad hoc networks, back in 2011 when I did my master's and PhD. And so our driving thesis for blockchains and crypto is that just like the internet created this information superhighway, blockchains create a coordination or cooperation superhighway where you can actually build things where without necessarily trusting the other parties. And one particular way in which this manifested is the idea of permissionless innovation. I think this was really pioneered in Ethereum, the idea that as a creator, if you create a product and put it on your website, let's say pre-blockchain, then what you're basically doing is saying that, hey, I'm an innovator. I've come up with this really cool application. Let's say it's a competitor to Facebook. And then you put it up on your server. You're saying two things like, I've come up with this cool idea, but you also need to trust me for the continued execution of this service and that I'm going to be executing it in the same way. And so what Ethereum basically allows you to do is to decouple where trust comes from and where innovation comes from. And so if you yourself don't have to be trusted, then what that does is enables many more people to participate in this creator economy. You don't need to be a reputed entity to actually offer services. So I think of this as a kind of paradigm shift in how we organize society. Because if you think about it, like 70 years back, we came up with this idea of venture capital, right, which is separating who brings innovation and who brings capital. And you don't need the double coincidence of the person who has money also needs to have good ideas. But we still continue to have a paradigm where ideas need to be trusted because they are running the service or whatever. And with the paradigm of Ethereum is basically just expanding that massively to say that if you have an idea, you just write a smart contract, you don't need to be trusted. Ethereum is trusted. And from that. That's such an amazing like paradigm shift. But it was also going contra my own experience of building in blockchains, which is if you wanted to kind of create anything deeper than like a DApp or a smart contract, but which involves natively like doing a different way of consensus or a different kind of like distributed validation, which is like validating an oracle or a bridge or anything. You needed to go and build your own trust network for each of these things. And that's the problem we set out to solve. And in some sense, we didn't set out to solve the problem. We were just innovators trapped with that problem. We had ideas for how to build consensus and like data availability and various things. And we don't have a place where we get the same kind of freedom that a DApp builder, a smart contract builder gets. And I was looking for it. And when we found this idea that basically staking is the root of trust of Ethereum. People put down some stake and make a credible commitment that they are going to continue to validate the Ethereum blockchain. And if they don't do it, they're liable or they're willing to give up their stake. So they're getting into an economic like commitment that, hey, I'm going to do this, otherwise I'm willing to lose my stake. So they're putting their money where their mouth is. They're not just saying it, they're actually putting up some stake relative to that. So that's where the root of trust is for Ethereum. And the idea was if you can take that root of trust and instead of narrowly supplying it only to Ethereum, Ethereum block production, you can start supplying it to Ethereum services, like whether that is oracles, whether that is bridges, whether that is new consensus layers, whether that is new MEV management, whether there's new decentralized sequences. Any of these things, essentially, you can think of them as modules or services. And these modules or services can now like simply inherit portions of Ethereum security instead of having to go and build their own. I think the good analogy to keep in mind here is, from the cloud era, the idea of software as a service, SaaS solutions, right? And SaaS solutions actually encouraged a lot of open innovation because what happened was you have this thing called the cloud, like AWS or other Microsoft Azure or Google Cloud, and you don't have to, as a creator of a new like service like Stripe or Plaid or Squire or whatever, like you don't have to actually figure out how do I build a data center, how do I put these nodes up, how do I do all these things. I just write my one basic component, identity, verification, tying to bank accounts, whatever that one thing is. You just write that one thing, and anybody who's building a solution integrates a bunch of these SaaS solutions to create a user-facing solution. Right? There are hundreds or maybe thousands of SaaS solutions, on top of which, millions of user-facing applications are built. That's the same era we want to replicate in the blockchain world, where if you have security and distributed validation taken care of, then creators can focus singularly on the thing that they're good at, which is innovating on, oh, here is a kind of bridging service, here is a Oracle fetch service, here is a metaverse Oracle, which just gets your Twitter and other data into Ethereum. Here is other service and so on. And these services all live Genius Plus network, the Ethereum node. And now anybody who wants to build an application or a user-facing decentralized application can tie up these services together and create what they want. So it allows this notion of um, high degree of expressivity while having a shared trust network. So that's a kind of brief tour of Eigenlayer.
Wow, that was an amazing description. Thank you, Sharam, for that. Quick question, right? Because I hear all the time, I say Eigenlayer because I took some German, but I heard Eigenlayer, Eigenlayer. What's the right pronunciation, and how'd you guys come up with the name?
Thank you for the question. It is Eigenlayer, and you're right, its origin is German. And Eigen in German for your own, or It has multiple meanings, but the most kind of primitive meaning is your own. So Eigenlayer is your own layer. Like we want everybody to come up with their own ideas, their own things, and then be able to build it. Eigenlayer is also kind of like a tip of the hat to several like mathematical tools. When you create data and do data analytics, you basically put it into a matrix like a rows and columns, and one of the core features of this matrix is something called an eigenvector. So eigenvector, eigenvalue, eigenfunctions, all of these serve as some of the mathematical primitives that we routinely use, including in Eigenlayer. But I think the particular meaning we want to invoke in people's mind is the idea of open innovation and your own things you can do on top of this layer, rather than being constrained to what the platform offers as a kind of generic service.
Makes sense, and I appreciate the comparison to AWS. Right, it's almost like you're removing the need to create your own infrastructure or back end of validators, and to your point, you focus on creating user-facing services like bridges, oracles, maybe even the sequencer for layer twos. So I think what a lot of people are wondering is, I'm sure there's a lot of engineers talking to you about building on top of the Eigenlayer. What do you think is the low-hanging fruit? What's the use case that seems to make the most sense, and that's probably going to be readily available for testnet and then mainnet?
Yeah, so we started building Eigenlayer 1.5 years back, and so we've also building the first service on top, which is a data availability service run by Ethereum stakers. And the data availability service is pretty simple, you know, a very simple problem. How much data bandwidth does Ethereum offer? So before I go into this particular thing, I want to say how we think about, and at least one productive way of thinking about how do you build new services on Eigenlayer. I think one way to think about it is what are major missing ecosystem services that a lot of people can benefit from in the Ethereum ecosystem, and then try to build that particular service. And I'll highlight maybe like 5 problems in Ethereum, and then kind of like highlight how one could use Eigenlayer to like create services that solve these problem needs. Number one is data bandwidth, right? Like, so before I get into the 5 problems, I want to say Ethereum has this amazing layer 2 roadmap. And actually, I talked a little bit about permissionless innovation earlier. And what the layer 2 roadmap does is it's such a bold commitment from like Ethereum core, this notion of permissionless innovation. Because you're saying, you know, many people, like when the roadmap was written up like 3 years back, people are like, what? Nothing's going to happen on Ethereum, happen on these layer twos. Even though actually many people say that, right? But the commitment to permissionless innovation is inherent in the Ethereum ethos, that no, people can build many execution environments. They can build many different kinds of cryptographic proofs and crypto economic proofs like optimistic rollups and like ZK rollups. And this was a kind of deep commitment to permissionless innovation, and also a mechanism for scaling. So these two kind of went together. In fact, by making it more permissionless, these rollups kind of figured out how to do recursive proofs and all kinds of other things that are now going to make Ethereum very, very scalable. So just highlighting here that idea of scaling is a kind of second order problem once you kind of figure out the right economic architecture, which is that the code does some basic things, but a lot of others can borrow the trust and build, in a permissionless manner, many new things. And Eigenlayer is just doubling down on top of this core ethos. Okay, so what are the problems in this space, and what like can the market furnish as solutions to these problems, and using Eigenlayer as a kind of core primitive in the middle? One example is the data bandwidth of Ethereum. Even though these roll a lot of computations, Ethereum still has to do, you still have to publish the data to Ethereum. Why? Because you're offloading computation, but you need to other people, for them to continue computation, they need to know either the inputs or the outputs to the computation. So you need to have the rollups publish the data input or the data output from the computation to Ethereum. So this takes data bandwidth. So the total rollup data bandwidth is limited by the Ethereum data bandwidth, and Ethereum data bandwidth is 80 kilobytes per second, 3 kilobytes per second. Even if you don't use Ethereum for anything else other than just writing data. So this is somewhat low, and so we need a roadmap to scale it. And Ethereum has its own roadmap to scale it, but still the self-market for how to scale this is much broader than only one area, which has to be necessarily conservative because you're moving such a large ship, so you want to be careful. Okay, so data availability or data scaling is the first example of an Ethereum ecosystem problem that we can fix using Eigenlayer. You get a somewhat similar trust network if all the stakers opt in, and you get they can basically validate all your transactions to validate your data and then post data commitments only on Ethereum. So that's a very simple example of like a ecosystem gap that can be plugged through Eigenlayer, and we're building something called EigenDA just to do that. So just to give a sense of numbers, we're scaling data bandwidth from 80 kilobytes per second, which is Ethereum today, to 10 megabytes per second on EigenDA. And we have a roadmap to scale this much, much further. The idea is that we are not doing this by asking nodes to do more. We're not asking nodes to, like a Solana or something else, want all the nodes to do a lot of work. We're getting this higher performance by having each node do a little, but a lot of nodes do a little different thing so that together they do a lot. So split the data, each one gets this erasure coded data and cryptographically like sealed data, so they can all verify that they're getting the right thing. So that's the first service we're building, EigenDA. But there are all kinds of other problems on the kind of or market needs inside the Ethereum ecosystem. And the second one one can think of is sequencing. Rollups today have a single point sequencer. And if you think about why rollups need a sequencer, they basically take transactions and bundle and order them before committing to Ethereum. So if you're doing this, you are subjecting all the censorship resistance to go through this one node. There is a mode in many rollups to where if you include a transaction in Ethereum, you can force include it into the rollup. So this is why the rollup is secure even if there is only a single sequencer. But usually the latency of publishing something on Ethereum and then eventually including it on the rollup is quite large. People set it to several hours or maybe even a day. So while it's useful for like, oh, you can exit your money out of the rollup back to Ethereum, it is not enough for several other things. You want to do trades, and trades may expire within the time before you can withdraw. You want to have anything whose action time or response time is smaller than like several hours or a day. You need to have better censorship resistance. And one way to do it is get the Ethereum stakers to create like a new ordering service, transaction ordering service. And that's something that could be built on top of Eigenlayer. It's called decentralized sequencers. And one of the reasons that I think this is interesting is normally censorship resistance comes because the network is decentralized and many, many nodes like contribute into building it. And like some of the good questions there are like, how do we encourage many nodes to participate in this protocol without loading them heavily? Because if there are thousands of rollups, then and if every node in Ethereum has to download and execute all these rollups, then you lost all the scaling benefits. But the thing to note is for things like rollup sequencers, we have this notion that what the rollup node is doing two different things. One is bundling transactions, ordering transactions, and then second is executing them. Executing and proving is the complex, like it requires a lot more hardware and computational power. Ordering is just like taking a bunch of data and just like putting them in an order. So ordering, it's really nice for us that ordering is the contentious process, and execution is the hard process. So the single node can continue to do execution, whereas ordering purely like bits of data can be done on a more decentralized network. So that's the sequencing as a second example. Third example is Ethereum's latency of confirmation is 12 minutes. You would have applications like games and others where you want to confirm to the nodes in a few seconds. So it's possible to build a super fast confirmation layer. Like this layer verifies your zero knowledge proofs and such, and immediately sends you like a certificate that it has been verified. So users have a higher degree of assurance that what they're seeing is correct. So that's a latency of Ethereum can be solved using Eigenlayer. You can look at how to build bridges between Ethereum and other blockchains. We're seeing a lot of interest in this, not only between Ethereum and other blockchains, but also faster bridges between rollups and Ethereum, because some rollups take 7 days to settle to Ethereum. In the meanwhile, if you can still have like productive trade, which has lower latency, that's something that's very beneficial. If you have all the Ethereum, a lot of Ethereum stakers participate in your service, then that's definitely like a huge advantage. So, and then finally, I want to talk about MEV. And MEV is this thing that arises because Ethereum block proposers have freedom to order the transaction whichever way they want. But on Eigenlayer, because they're staked, they can make a commitment that they only order transactions in a certain way. For example, they may say that whenever you trigger you tell me already that you have a limit order, like whenever the price goes below this, then do this. And as a Eigenlayer staker was opted into this thing, whenever that happens, I'll make sure to include your transaction. Or like I'll sign off on encrypted transaction, and then I have to include only the decrypted transaction. Or I only sell you a portion of the block. All of these kinds of interesting things can be built on top of Eigenlayer. So that's a tour of like the types of use cases that we think would be interesting to build on Eigenlayer.
Sriram, awesome stuff, man. You have gone into an extreme amount of detail, and honestly, man, I have faith in what you guys are building. And one of the things that I wanted to touch on is restaking, right? So restaking has been an absolute game changer for staking on Ethereum, and I'm really excited to learn more about how you guys are taking it to the next level. So if you'd be able to explain more in detail about how Eigenlayer's restaking mechanism works, and also how it benefits ETH stakers who participate.
Yeah. So the core idea that we came up with and is called restaking is the idea that if you're staking on Ethereum, can you somehow use that? What you're doing is you're putting some money down and saying that I'm making Ethereum blocks correctly. Can we somehow let the same nodes, same stakers say that not only doing Ethereum blocks correctly, but also I opted into these like 5 other networks, this data network, this MEV network, this new chain, whatever other things, and I'm validating all of them correctly. So instead of saying I'm only doing this correctly, you're saying I'm doing all of them correctly. And that is really what restaking is. You can think of it as your and I'll come to exactly the modes of restaking. Maybe that helps quite a bit to explain this. So there are 2 modes of restaking that we have. One is called native restaking. Native restaking is you go to Ethereum, you stake ETH in the Ethereum contracts because you want to make Ethereum blocks. And normally, what you would do is you would say that if I hold the money and I put it in, I'd say that I'm the one eligible to withdraw. I put my own wallet address as the withdrawal address. But instead, if you have, if you want to say that I want to be I want to participate in Eigenlayer, what you would do is you would set the withdrawal address to the Eigenlayer smart contracts. Okay, now you've set the withdrawal address to the Eigenlayer smart contracts. Now in the Eigenlayer smart contracts, you can set the withdrawal address to yourself. So what you're doing is adding on a step in the withdrawal process. Instead of withdrawing and directly going into your account, withdrawing goes to the Eigenlayer contracts hands them to your account. So why is this helpful for Eigenlayer is when somebody is making a commitment that they are actually validating. So now that you participate, once you did this, now you're a participant in the Eigenlayer ecosystem. And you can say, oh, I'm going to validate this new blockchain. I'm going to validate this new bridge. I'm going to validate this new data availability, whichever ones you want to opt into. So a core principle underlying Eigenlayer is opt-in. Like you don't have to do everything that is happening on Eigenlayer. You opt in to whichever one you want to actually participate in. So that's the kind of core Eigenlayer mechanism. And why we need the withdrawal to pass through Eigenlayer is that if you made a claim that I'm going to like validate this blockchain, and in that blockchain, the basic rule is do not sign two blocks with the same block number, but you go ahead and do it, we need a mechanism to penalize such bad stakers. So the bad stakers get penalized when they try to withdraw. The Eigenlayer contracts will slash or apply a negative incentive and take a portion of the funds and only allow them to withdraw the remaining portion of the funds. So that is the core restaking mechanism. You set the withdrawal credentials to the Eigenlayer contracts. Eigenlayer contracts lets you withdraw through the Eigenlayer. It's a step in your withdrawal process. And so what that does is allows you to like make very credible commitments that you're going to do all these other things correctly. And another version of restaking is called liquid restaking. I know the title of this thing is we want to look at liquid staking tokens. So the idea is if you had a liquid staking token already, which represents a staked position in Ethereum, you can just deposit the liquid staking token into the Eigenlayer contracts instead of setting withdrawals or anything like that. So these are the two different modes of participation. You can either do native restaking or you can do liquid restaking. Once you did it, for each of these services, either you could be like running node operator yourself, like you could download like you have a Geth node that you download and run for Ethereum. You may be downloading and running these other nodes yourself, or you may say, I don't want to do it. I want Coinbase Cloud to do it, or Kraken to do it, or like Chorus One or Figment or somebody, right? Like, or your friend to do it. It's up to you. It's a free market. Like you can ask whoever your friend or whoever you trust to do the node operation for you. So that is the core primitive of Eigenlayer.
Sriram, you have truly been blessed by God with the genius of a once in a generation Einstein, sir. Truly, I am learning so much in this conversation, brother. So before I pass it on to the other individuals in the panel, I'm interested in hearing more about the progress of the current testnet. And I understand there's currently 3 stages of the testnet. So I wanted to inquire which milestones does Eigenlayer hope to achieve in each stage?
Yes. So the launch, because an Eigenlayer is a multi-sided marketplace in some basic sense, you can think of it as a kind of like a marketplace for decentralized trust, right? Just flipping the perspective, the idea is, um, the core thing in blockchain is decentralized trust, right? If you take a solution, you call it a blockchain solution, you remove decentralized trust from it, it's no longer a blockchain solution. If you add decentralized trust to it, it becomes a blockchain solution. So decentralized trust is the essential ingredient for what is called a blockchain solution. And so, or a crypto solution. So the thing is, Eigenlayer is a marketplace for decentralized trust. So, and decentralized trust is, this marketplace has 3 sides of participants. One is stakers, people who are putting in the money and making credible commitments. The next one is node operators or a technical role. They actually run like node operations. They could be more professionalized. They could also be like personal home stakers. And the third side is people building these new services, like these new SaaS solutions that we were talking about. And the launch is therefore also geared towards 3 steps. Step 1, staking. So in the step 1 testnet that we have running, the only thing you can do is take your stake, whether it is liquid staking derivatives or native staking, and set the restaking power potential into Eigenlayer. That's step 1, stage 1. And in stage one, essentially, there are no node operators, so they're not running anything. And there is also no services, so there's nothing to run. Stage two brings on the next side of this marketplace, which is node operators. So there'll be a simple service that they will be running. This doesn't have to be like a big or complex or highly profitable service, but basically to onboard this side, so we allow for delegation of stakers to node operators, and node operators can download and run this simple service so that they know that they are actually participating in the economy. So that's the second side of the market. Then the third side, which is productive services, which have fees turn on. And this could be EigenDA, our own service, or like other people's services, many of whom we are partnering with, building and launching services. So this is the three stages, and we hope to have the first stage. Right now, first stage is on testnet, and every quarter, hopefully move on to the next stage.
I wanted to ask you real quick about the withdrawal penalties for running a node. So you mentioned that there was like quote unquote bad node operators or bad stakers, and they get some kind of penalty for like not abiding by the network's rules, and they get punished by the contract. I was just curious if you could elaborate on that, like what kind of things like make someone who's a node operator like a bad staker, quote unquote.
Yes. So, if you look at the Ethereum protocol has negative incentives for various kinds of things. Like, you have negative incentives for, if you don't make a block when you have a block slot. It has, there's something called a sync committee or a light node committee, and you have to participate in it. And if you do something wrong there, you will, lose some stake and so on. So there are many kinds of negative penalties that protocols use to constrain the behavior. Because at the end of the day, what we're building is something where, I think Ethereum pioneered this idea that when you're building a purely pseudonymous system where you don't know who the participants are and you have no way of knowing it or no requirement to know them, then you have to make sure that both the positive and negative incentives are built inside the system so that people cannot come and do like extreme things. And that an example of a bad thing that Eigenlayer is designed to be something similar where you can have generic penalties, but the kind of penalties we want to enforce are what I would call provable malicious behavior. Okay, what is a provable malicious behavior? Provable malicious behavior is, you say, for example, that you're validating a blockchain. And if you run the blockchain software, any version of the blockchain software, you will never sign two distinct blocks of the same block number. Block number 30, you either sign this or sign that. You don't sign both because that leads to confusion and chaos. And it is not a property of a normal node. It is only a property of like a malicious node operator who's trying to manipulate the code in order to attack the system. So essentially, you need to have a slashing penalty where if you detect and it is provable on chain on Ethereum using a slashing contract that node misbehaved, then they may be liable to lose all their stake. So that is what we mean by slashing. And Eigenlayer slashing is designed to be very rare and only for people who are clearly like trying to attack the system, rather than, oh, I just forgot to turn off the node or whatever, like regular things. We have no negative penalties. You'll just lose rewards for those things. But what would happen is if you turn off, if you try to actively attack the system will like resist the attack by actually applying economic penalties.
I have a question here. Go ahead first.
Oh yeah, man. I was gonna pass
go
it
ahead.
over. I was gonna pass it over to you, brother. Actually, so feel free, man. Good to have you up here, brother.
Yeah, I'm glad to be here. So I had a question regarding the slashing mechanism. So it seems to me the slashing is done by smart contracts, aka on the execution layer. So in that sense, it's probably not even possible to apply a negative slashing penalty because that would have to be done on the consensus layer, right? Not on the execution layer. And if I understand correctly, your entire stack is built on the execution layer, aka like the smart contract, EVM layer, not on the layer that's actually doing the validation. Is that correct?
That is absolutely correct. So I'll explain how. So Eigenlayer is built purely on the execution layer because that's the only place where you can deploy programs. You cannot deploy programs onto the beacon chain. So how do we do this then? It is tricky, and that's why probably maybe nobody kind of came up with this before. But the solution post facto is not that complicated. It's basically the following: whenever like you exit your position, so you're a staker, you set the withdrawal credentials to Eigenlayer. Now, whenever you exit your staking position and like unstake from Ethereum, then all your money, like the 32 ETH that you've locked up, now gets withdrawn to your withdrawal address, which is the Eigenlayer contracts. And Eigenlayer contracts, if there was no provable malicious behavior, would let you withdraw all your 32 ETH and all the rewards that you earn through Eigenlayer. So that's what you would normally do. But in the attack mode, what happens is like the contract connected to the Eigenlayer contract tells the Eigenlayer contract that, hey, you have attacked and here's the proof. And now like when you try to withdraw your ETH, the 32 ETH goes to the Eigenlayer contracts. In the Eigenlayer contracts, some portion of it is slashed, removed, and then you get back the remaining ETH. So that's how we enforce the contract, is because I think Chapella, which happened yesterday, was critical because that's when this part has been enforced, that when you withdraw, the money goes to the withdrawal address in the execution layer.
Got it. So follow-up question to that is, how problematic would it be for applications built on top of Eigenlayer if slashing were to occur at the consensus layer level, extreme slashing? Let's say your 32 ETH just gets slashed down to 1 ETH, less than 1 ETH, right? How does that affect the security of any application that's built on top of Eigenlayer?
Yeah, that is a really important thing. That's why when people make memes about restaking or whatever, so none of those things actually work. The only thing that works is there's a single place which maintains your entire state about what's going on Ethereum, what's going on in every single application that you've opted into. If you got slashed in one application, the other applications need to be informed. So Eigenlayer contracts act as the universal sync point across all the applications and Ethereum. So we have oracles reading from Ethereum state, the beacon chain state, and reporting to the Eigenlayer contracts using, this is coming up in the next launch, using zero knowledge proofs, what is going on in the beacon chain. And so we will trigger, like, if as soon as you know that, as soon as the contract knows that they've been slashed in other layers, their positions on the Eigenlayer is accordingly rebalanced. And I want to add something here, which I think many people think of Eigenlayer as some kind of like a financial primitive. It's not. It's a validation primitive. Like, people have staked to do validation. And if you've done provably wrong validation in Ethereum, then you don't have a ability to continue doing validation on other things. As this is very different from a financial primitive, which takes an LSD and then gives you a stable coin or something else. So I think the mental models that we have need to be correspondingly balanced to what the role of Eigenlayer is a universal validation engine.
Got it. Yeah, that makes sense. So there will be basically zero trust assumptions in whatever interoperability solution you're rolling out to facilitate that reading the validator state from the consensus layer. Is that correct?
That is correct. I mean, it's not zero trust assumption. It relies on the Ethereum protocol has something called the Light Client Sync Committee, 512 nodes which sign off on what the Ethereum state is. This is part of the Ethereum protocol. And there are existing solutions which are already like working on zero knowledge proofs. The most prominent one is called succinct. It's a zero knowledge proof of the Ethereum beacon chain state to the Ethereum execution state. But also, I want to point out that Ethereum itself is coming up with like upgrades on the native integration between beacon chain and execution chain. So that may take a year or so to roll out. But whenever that is there, essentially, like from the execution layer, we would be able to read like beacon chain state rules.
Okay, yeah, that makes sense. Thank you.
And by the way, that was a great conversation, right? I think it's like a very technical conversation, but it sounds like Eigenlayer, if you're a developer, right, and you're building a user-facing module or services, it should provide a higher security model than creating your own set of validators, right? But then I wonder if there are existing, let's say, bridges, let's say oracles. I'm not gonna name names, right? But are there projects that have tried to create their own set of validators that reach out to Eigenlayer and say, hey, listen, this is probably a better model for us, and we'd like to transition to your model.
That is correct. Like the successful ones won't say that, right? Or the insanely successful ones. But the ones that are next in line and want to compete with the top ones would absolutely say that. And that's what we find is basically, yeah. So essentially, if you wanted to build a new Oracle bridge, whatever other things, and the incumbent says that, oh, we have X billion dollar of security, like how are you going to get X billion dollar of security? And it's possible you can borrow that from Eigenlayer. You don't have to create that again and again using your own token value for each application. So this gives a competitive advantage to new innovators who want to come and propose better solutions. So this is our like driving value, is to enable more permissionless innovation, and anybody who has good ideas and can execute and build on top of it should be able to borrow trust rather than having to themselves be trusted.
Cool, appreciate that. And the follow-up question to that, right? You mentioned Eigenlayer is almost like a marketplace for trust, right? Obviously, there's different models of restaking in different stages as well that you mentioned. But is the most likely scenario, most popular scenario, is for validators to have an increase in their yield of ETH, or is it for them to have the regular yield from validating and MEV, but also receiving a different token from the projects they're building on top of Eigenlayer?
There are many different business models for projects to build on top of Eigenlayer. One model is the least crypto native model, but also quite interesting, is you just have a company. This company builds a new Oracle and then says, the fees for like this Oracle, or every time you do a query, you have to pay 1 ETH. And the 1 ETH, like 0.8 ETH is divided to the stakers, and then 0.2 ETH goes to kind of my Oracle wallet because we created it. Okay, so this is one example of a business model. So now the stakers opting in have to calculate how much fee revenue they're earning. But there are also other models where the Oracle could say, no, payment for this service is happening in our own token, and initially there is a fraction of inflation of our token where that goes to the stakers. The stakers want to opt into that, they can do that. Or there may be another option might be that the builders of this new project have required dual staking. They require Ethereum staking. Separately, there's a group of nodes staking Ethereum. Maybe there's a new token or like an existing bridge or Oracle token, and they have to stake it separately. And these two groups have to agree. Only then the input is considered valid. So there are all kinds of interesting economic models to be built around Eigenlayer. But as far as the stakers are concerned, they need to look at what is this new project? Is it legitimate? Does it have, what is the slashing contract that it has written? Does it make sense? Are there protections? If the contract has bugs, what is the governance structure? what is the additional operational requirements? Do I need to have a 64 core machine, or what gigabytes of RAM do I need to have to run this? All of these things. And I think if the operational cost and whatever additional risk is smaller than the fee paid, which may either be in fee revenue directly or in new token or some other thing, like they just have to evaluate that, whether that makes sense for them.
Sriram, I do have a follow up to this conversation. I know we were discussing more about the security aspect and all of those things, and I do believe that it is important to address any potential risks head on. So I'm curious to know how Eigenlayer would address the various risks as far as like smart contract risk and market risk and things of that nature.
Yes. So, initially the way we are launching it is there is a slashing veto committee, which basically is comprised of like broader Ethereum community members and Eigenlayer community members, which basically essentially allows veto of slashing, which means like any when you opt into any of these services, if they slash you, then the committee has to essentially approve the slashing. Only then the smart contract has to approve the slashing and the committee has to approve the slashing. Otherwise, the slashing doesn't go through. So this is a double buffering for the stakers. So, the stakers get slashed only if the staking contracts slash them, as well as the committee agrees to it. So this essentially creates a layer of protection um, between the for the stakers. So that is the security model, trying to minimize any kind of security risks. Other security risks in the contracts are also, the way we think about it is that smart contract development is not at a place where you can just formally verify a contract and be sure that there are no bugs. And so we want to have like as many layers of protection as possible for the users. And one more layer for protection in the smart contracts, in the Eigenlayer smart contracts themselves, is that whenever you withdraw, this is true in any staking system, right? When you unstake, you don't get instantaneous exit. There is a wait period, of a few days. Only after that you'll be able to get your unstaked position. And this allows us to make sure to slow down time so that if there are any bugs and other things, we can kind of handle that in the contracts. So that's the high level security mechanisms, in addition to, of course, trying to do as good a job as possible of like smart contract audits, bug bounties, all the usual best practices in the area.
Pardon my interruption. I do have to hop off right now to start our Twitter Spaces, which starts at 4 p.m., about 2.5 minutes. Thank you for answering all of my questions very well and for shedding light on the roadmap of Eigenlayer. Super excited about you guys, and yeah, I hope we cross paths in the near future. Thank you.
Thank you so much.
It was an honor having you up here, man.
Yeah,
If anyone
thanks for
wants to
coming up
come
here.
up, if anyone wants to come up, we have about like 3 or 4 minutes left. If anyone wants to come up and ask any questions or give any last statements, feel free to do so. I've posted on the Nest a link to all of Eigenlayer stuff and what they're building. So feel free to give Sriram a follow and also Eigenlayer a follow to keep up to date with all the innovations that they are onboarding onto the Ethereum ecosystem. And very interesting stuff here. And I really enjoy how Eigenlayer is really designed to enable individuals that are staking with Ethereum to participate in all the validating novel models and really protocols that are built on top of the Eigenlayer system. And through this conversation, we've learned that stakers can provide an additional layer of security by opting in and restaking their ETH and that essentially allows the end user to leverage Ethereum's robust infrastructure. And I really agree with what Sriram said. As far as like Bitcoin was being limited to sort of peer-to-peer payments and required a new trust network for each new decentralized application. And I find that Eigenlayer really goes in tandem with what the current ETH landscape looks like as far as modular blockchains goes, and really allow for dApps to build on top of its own trust network. And as Sriram had said earlier, decoupling innovation and trust, which in turn would make it easier for developers to create new decentralized applications. So before we wrap up, I don't see anybody coming up to speak. So we're gonna finish off with Payne. Payne, go on ahead, man.
Yeah, I mean, I don't have too much else to say. I just want to say, thank you so much for coming up. I'm very excited about LSDs, and I think that people don't understand the potential of like your collateral earning yield. I think that it's very understated, just like how much that's going to impact not only the crypto ecosystem, but the broader financial ecosystem. And I think that the people building protocols like these right now are going to just be the biggest beneficiaries of that. And I'm super excited for what Eigenlayer is building. So, yeah, thank you so much for coming and saying your piece and giving us all the technical knowledge and answering everyone's questions.
Thank you so much. Really, really appreciate and enjoyed the range of questions in this call, and looking forward to engage with the Because Bitcoin community.
Go right on ahead,
The
brother.
alchemist.
Yeah, one last question, because I'm sure by now everybody's super excited about Eigenlayer. So you hear everybody being excited about your project. But what about you? Is there a project that you're excited about in ETH or in crypto in general?
Let's go.
Many, many, many projects.
That was a great question.
So the innovations happening in the layer 2 landscape is something that I'm like following very closely and very excited about, both in, and we're seeing different models play out, and I don't know which models will win out, but they're all like really good experiments. Like, for example, just the business model of optimism versus arbitrum building a little bit more close stack, but putting in a lot of engineering firepower behind it, and optimism building it everything in the open and having a completely open stack that anybody can fork and build their roll-ups. Both are really interesting experiments in their own rights. And uh, there are other projects, that there's also a ripple of the same thing in uh, the the ZK rollup space, where Starkware may be taking a little bit more of the Arbitrum type approach.
Wait, I'm sorry to interrupt you. Did you say Ripple?
I said a ripple of the same thing, in the sense that
Oh,
not
I was
exactly.
like, what? I was like, they're building LSD. Yeah, sorry, continue.
That's so funny. There is a similar thing happening in the ZK rollup space, where Starkware is taking a more like company type approach, and there is Risk Zero taking a much more open approach, where they have same kind of Stark verifiers and stuff built openly for anybody to fork and use. And I think these are all like really interesting experiments. And on the LSD space, of course, very excited about all the different variations of experiments. Like people say they're Bitcoin maxi or Ethereum maxi or whatever. I'm an open innovation maxi, so I see new things. I'm excited. And
Hell yeah, man. That's the attitude to have. I think so many people get stuck in a mindset of, oh, only this one thing can work, or if it's not broke, don't fix it, right? But if it wasn't broke, don't fix it. We would still be riding horses. So
yeah, exactly.
it's always it always pays off to experiment with new things and try things out, move fast, break things. And so, yeah, that was a great quote.
Yeah, totally. So the thing is, on the LSD space, like, you have the Lido experimenting on the one side, and Rocket Pool experimenting with a little bit more decentralized structure. There's also new things like EtherFi and Puffer, which are experimenting on different ends of the spectrum. And, all of these are really interesting. And I'm very excited to have the opportunity to engage with some of them. On the sequencing side, decentralized sequencing side, we have Espresso, which is built of some of the best academics who are now like focusing on building a solution to or the sequencing problem for rollups. So yeah, too many things to be excited about. Looking forward to interact with several of you here in the call who may be interested in building new things.
Thanks, man. Appreciate that.
Thank you so much for having us up, man, or for coming up and letting us have you up. We're super blessed with the knowledge that you gave our audience, and we'll welcome you back anytime, man. Thank you so much.
Really, really appreciate it. I really enjoyed it, and thanks to all of you for engaging in productive, constructive conversations. Thank you so much.
It was an honor, man. It was truly an honor. I want to wish you a great weekend. God bless you, your family, your friends, and looking forward to all the innovations that Eigenlayer is going to set upon the overall crypto ecosystem. I'm really bullish on all things LSDs. I'm bullish on you guys, and I'm bullish on also Obel Network. Really excited also about Espresso. I heard that you mentioned them just now. So, with that being said, I want to thank all the individuals here in the audience that have participated in this amazing conversation between Sri Ram from Eigenlayer and the individuals that are up on the panel, including Unsheath, that is hosting up their space. So, feel free to tune into that as well. And if you guys enjoyed this conversation, my name is Wabi, and I host spaces like these really throughout the week here at Because Bitcoin. And you can find like founders just like Sri Ram up here. We've hosted Saga, we've hosted Say, a ton of stuff on Arbitrum. So if you enjoy this kind of content, feel free to follow us here Because Bitcoin and turn on bell notifications so that you can be made aware of when these spaces go live. We'll be back later on today at 8 p.m. Eastern with Joe Carlos there for our Bitcoin edition spaces. We're going to talk about, really the global commoditization of Bitcoin and all the current developments on that space. So look forward to that. And take care. And Sri Ram, I look forward to speaking with you in the future, and truly an honor. And I look forward to the future, man. Thank you all so much. Thank you, thank you, thank you. I am more bullish than ever. Let's go. And it was great. It was great to have a fun time here, and we had some laughs and all that stuff, and some really educational tidbits here. And that's what I strive to do on this platform. So, I hope I made you guys proud. This was truly a once in a
No, you
lifetime.
did great. You did great, Wabi.
Thanks, man. Thanks. Trying my best, man.
Cool.
Thank you all
Well,
so much.
Thank you so much, Robbie. Really
Yep.
enjoyed it. Take care.
Take care. We'll see you guys at 8.
Yeah, thanks for having us, man. Take care.